Hey there, Lincoln here from bullacademy.org. Today I want to talk about post-IPO stock price dips. So in the last 3 months, we've talked about stocks, warrants, we've talked about the bull mentality, we've talked about investing for the long term and ignoring the fear in the market and being greedy when they're fearful and being fearful when they are greedy, right? We've talked about all these things, but I keep getting the same questions over and over again. Lincoln, is this SPAC going to go down in price after the merger? Is GRAF Velodyne going to go down after the merger? Why did GRAF Velodyne go down after the merger? Is FMCI Tattooed Chef going to go down after the merger? Why did FMCI stock price go down after the merger vote? Why is this stock down today? Why is that stock down today? And I'm just here thinking, hey, come on, you know what I preach on this channel. I preach the bull mentality. The bull mentality is that we know what we invest in. We understand what we invest in. We believe in what we invest in, and we hold for the long term. That's the very last part of that. We hold for the long term, right? The long term is what matters. We invest in companies we know, understand, and believe in. And the last part of that, the long term part, holding for the long term, that seems to be missing a lot of people. That seems to be going right over people's heads. That's the most important part. You can invest in a whole bunch of companies that are great, but if you try to day trade them or try to swing trade them and time the market, you're going to fail. You're going to lose your money. It is not a winning strategy. So I don't care what happens right after the merger. I don't care what happens right after the IPO. If I know this company, I understand it, I believe in it, I'm going to invest for the long term. And over the long term, the market has shown over and over again that that's the best strategy. When we invest for the long term, we have a much better chance of surviving the ups and the downs. The market will go down. It will absolutely happen. Just like what goes up must come down, it will come down. Your stock prices will not only go up. I remember I was in the Uber one time, and my Uber driver, I was talking to him about investing in stocks because I always ask my Uber drivers and Lyft drivers these days if they're investing in Uber and Lyft, because I want to know, hey, do you have equity in the companies that you're driving for? Because driving is okay, but you want to own what you do. So we were talking, and at some point it got to Bitcoin. And he tells me, you should invest in Bitcoin because Bitcoin only goes up. And of course I was tired. I just got from the airport and I didn't want to argue and get into that whole thing. So I said, okay, Bitcoin goes up, but it will also go down. And we know that to be true because we've seen it over and over again. We've also seen the same in the stock market. Stocks go up. Sometimes they shoot up like they're going to go up forever. And then they come crashing down. We saw that with Kodak, and they shot up and people thought, oh, it's only gonna go up. So they kept buying to the hype, and then they came crashing back down and they lost their money because they were trying to time the market. They were trying to get rich quick. If you believe in the companies you're investing in, don't worry about the short-term volatility. It's only going to hurt you if you're fixating on the short term. If you see your stocks go down and you sell, then you're gonna lose money. That's how it goes. You bought in at a high price and you sold at a low price. You bought high and sold low. You're going to lose money. That's just math, right? So don't buy high and sell low. Buy and then never sell. That is my strategy. I buy and I plan to hold forever, because wealth is not about how much money you have. Wealth is about how much money you have access to. And the more value, the more equity you have in your assets, your stocks, the more access you will have to more money. The banks will say, hey, how much equity do you have in your stocks, in your real estate, in your own business? And the more you can tell them, the more money they will give you. They don't care how much cash you have. What they care about is, do you have income and do you have wealth? Do you have assets that have value, that you have equity in? The banks want to see your income statement and your wealth, right? Your net worth. That's what matters. So if I have all my stocks forever, that's money. I don't need to sell my stocks to realize my gains. Just the fact that I have those stocks and they continue to go up in value over the long term is winning. That's the way you win in wealth building. You don't try to buy and sell and make quick bucks. You try to build your wealth over the long term. So I say all of this just to prefix what we're about to see from these companies that you have for sure heard of. These companies all went down in stock price soon after their IPO. Stocks go up and down. I want you to really understand that. But over the long term, you're going to see that all these companies have gone up. And these are some of the most powerful companies in the world today. And the people who invested in them through the ups and downs have benefited greatly from the appreciation of the value of these assets. That's what I want to instill in you. Patience, understanding what you're investing in, and just holding for the long term. That's how you give yourself the best chance at success on the stock market. That's how we build wealth in this country. So let's take a look at these 7 companies that saw dips in their stock price soon after their IPOs. All of these companies are very heavily celebrated. We all know of them. They're very powerful companies. They have extremely large market capitalizations. And despite the downturns in their stock prices, they continue to succeed. And their investors continue to benefit. The ones that are patient have benefited greatly. So let's look at Facebook to start. They opened at $42 per share, and then they kept falling through May and June, went up a little bit, and then fell even further for July, August, September, and still in January, they're still down from their IPO price. Facebook stock did not do well right after its IPO. A whole year after, they're still below their IPO price. A whole year later, it's finally above its IPO price, and it continues to go up and never looks back. Next, we have Amazon. The company, which was founded in 1994, has a market cap of $1.67 trillion. Just behind Apple. Amazon IPO'd at $1.7, and then it went down, and then it went up, and never looked back. A great company that's just dominating the market today had a subpar IPO. The stock price went down. Okay, made my point. Let's keep going. Next up, let's Netflix and chill. The company, founded in 1997, has a market cap of $239 billion. You would think that Netflix stock has only gone up since its IPO. But again, the data. And the data says Netflix had an IPO that went down, and then a little bit up, and then just even further down, and then up a little bit to equalize, and then we hit the basement. And Netflix is just in cents, 46 cents per share, and then up, still right at the IPO price, and then it went up and never looked back. The market dominator in video streaming, online video streaming, had a subpar IPO. It went down. Stocks go down. Let's keep going. Next up, we have Alphabet, or Google. The data shows that after Google's IPO, the stock price went down, and then even further down. And then it went up, but still under its IPO, and then it went up, and never looked back. Okay, so the stock went down and then back up. It's pretty good. So those are the FANG stocks. Each of them went down soon after their IPO, and some of them stayed down for even over a year, and then they kept going up after that. They went up and never looked back. But along the way, their stock price fluctuated, going up and down and up and down. But eventually they became the companies that we know today, market dominators that are being tried because they appear to be monopolies, right? Even those companies went down after their IPOs, and then it went up. But again, along the way, they went up and down. So that's the data. That's not my opinion. That's just the data. So yes, in the short term, stocks will go down. They will definitely go down. But if you're investing for the long term and companies are fundamentally good and you believe in them, then you shouldn't be too worried about short-term volatility. That's why I don't care if a SPAC stock price goes down after the merger. because I only invest in companies that I believe in and for the long term. And if you're practicing the bull mentality too, then you shouldn't be too concerned either. So thank you for watching this video. If you enjoyed it, like the video below, subscribe to the channel, hit the notification bell so you know the next time I publish a new video, and comment below what your thoughts are on this data that we've seen in this video. What do you think about stock prices going down after the IPO, after their SPAC mergers? And let me know what your thoughts are on short-term volatility. If you're one of those people who are concerned about the stocks going down after their mergers or their IPOs, I want to know why. Please let me know in the comments below. I want to know what your concerns are. And if you want to help the channel grow and get more access to me and more frequent access to my portfolio updates, then join our Patreon community at patreon.boacademy.org. You'll get priority access to request videos and get direct answers to your investing questions. And you will have a chance at winning $200 every month just for being a loyal and engaged patron. And of course, you will get merch such as stickers and mugs and t-shirts in the future. I'm Lincoln with boacademy.org. Thank you again and have a great day.